Hello everyone, welcome to the Ichimoku Charts.com daily analysis for the S&P 500 for Friday, May the 18th, 2012. Well, a continuation of the trend to the downside today and another black-bodied candle. We've had a long series of black-bodied candles, and in this first time frame downtrend we've only had two very small white-bodied candles and continuation of this downside momentum. The market today took out the round number support at 1300, and that was an area where there was potential for the market to find some buying coming in, but the sellers had enough momentum to close the market down below there in a fairly bearish manner. The market did, however, stop at the previous support level at 1295 and just closed beyond there, and we have a small shadow on the bottom showing some upside price rejection from below that area. So that's an important area moving forward tomorrow. Only a small amount of capitulation, not really terribly significant, but it could end up being important. In terms of the short-term dynamics here in this market, the sellers have made some solid net bearish progress, not as much as the previous day, but certainly a larger amount than I expected. Yesterday was an extreme day. Quite often after these extreme days, the market needs to take a rest, but that hasn't really happened today. We saw the buyers attempt to take control of the market, trading up to around 13.12 or so, and then they lost commitment up around that level, and the sellers came back in to close the market down towards the lows and take fairly strong control of this market, and showing strong commitment once again to taking this trend lower by taking out the previous low, trading nowhere near the previous high. If this market does continue trending down, we do have the next support level down at 1277. We can see this minor level here, and then down to 1269, and a previous level down around 1258. So some solid support down below, but the market could fall 20 or so points below where it's trading at the moment before it does find strong support. To the upside, obviously now the 1300 round number level will act as potential resistance to this market if we do rally, so we need to watch that. And there isn't any major resistance until the market trades up to around 1333, so if we see some strong buying coming in, we could retrace a substantial portion of this first time frame downswing. In terms of Ichimoku, the market is bearish in all three time frames. We're trading below the cloud, below the Kijun-sen, the pink line here, and the Tenkan-sen, the green line, and both of these indicators are pointing down very sharply, reflecting the solid downside momentum that we have in this market. The market is trading a fair way away from the cloud and the Kijun-sen, and quite often when that happens, it means that the market is starting to look a little bit overextended, and we can get a decent retracement back towards those levels, a bit like a rubber band, where the market will stretch out away from those levels, and those levels represent equilibrium in big picture terms and the medium term time frame. So like a rubber band, when it stretches too far, it could bounce back fairly sharply, so we could see some sort of a decent retracement of this previous downswing. Having said that, however, there aren't any signs yet that will happen. The bears are in control, they're keen, they're still showing some strong commitment. We're seeing no strength from the buyers at the moment, but perhaps one of these levels here, the 1295 level, may hold again, or even down around the 1277. We just need to be patient and look for some white body candles to come into this market, some candles where the buyers are attempting to take control.